Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 251. And today's topic for discussion is, can index or indices consolidate for long periods? So we'll show you past data as to how sometimes after a huge run, indices tend to consolidate for a long time. But there are still opportunities during that period of consolidation, and that's what we will see in the charts today. In terms of the markets, after a huge bounce yesterday, the markets collapsed back down again. The US futures were down through the day. FIIs, of course, sold into yesterday's rally also. And while everything was not lost, however, it is now a complete confusion whether we were wanting to go up after the bounce, or was it just a jet cat bounce and we are going to go down now. I think in the next couple of sessions that will become very clear. In terms of the weakness in several sectors like metals, commodities, energy stocks, it was very evident that this is sort of continuation of the downtrend that we have seen. Some banking stocks, auto stocks, FMCG stocks were lesser hit. However, everything was hit, and it has again created a huge sort of a red picture on a weekly and a monthly basis also. Metals are now down 21% for the month and 29% for 3 months and 30% for the financial year. So a grim situation. However, at times these are indications, or at least we are on the way to making some bottom somewhere. It may come early, it may come late, we don't know, but we are definitely on the path of reaching the next sort of stop in terms of the bottom. In terms of the indices, the makeup, Nifty Next 50 was down 1.83%, CNX 200 down 1.5%, most indices down 1.3 to 1.8% down. Small caps were the least hit, so that is some sort of silver lining in today's fall, that small caps did not fall much. They fell only 1.05%. In terms of weekend investing, small cases, many small cases did quite well with under 1% fall. However, NNF 10 was hit the most at minus 2.19 and MI EverGreen at minus 1.16, along with ATH2 at minus 1.14%. So not a pretty day, but hoping that yesterday's pullback was the start of a pullback. We'll have to see how things pan out. Heat map, as expected, totally red. Yesterday it was totally green. So in some sense, the market is totally directionless right now. The larger trend, intermediate trend, is still down. However, market is trying to create some intermediate bottom and go up, and we are sort of in a confusion range in that. The main sort of laggards for the day were Reliance at minus 3%, ONGC at minus 3%, JSW Steel down 4.5%, Hindalco down almost 7%, Tata Steel down 5%. So these were the big hits on the downside. ITC down almost 2%, Titan down 2%, Tata Motors 1%, NTPC 1.5%, Coal India almost 3%, Wipro 3.27%. So despite rupee losing ground and making new highs on the USD INR, IT still was losing. Only TCS was sort of flat. And within banking also, ICICI Bank was down almost 1.5%, and Bajaj Finance and Bajaj Finserv were down almost 2 to 2.5%. HDFC Life and SBI Life also were reeling down at 2.5%. So pretty bleak picture today from across the Nifty spectrum. What was going up in the CNX 500 universe? ITI was up 17%, Sequent Scientific up 7%, Orient Electric up 7%, All Cargo up 6%, and CRISIL up 5%. What was down? Sun TV Network down almost 9%. EID Perry, which was hugely up yesterday, collapsed down minus 8% today. Hind Copper minus 7%. SpiceJet minus 7%. Hindalco also dramatically down. So commodities have really been badly hit in this particular time. So the question is, can index consolidate for long periods? So what we have seen, at least in the Indian market, in the last 30 odd years of data, is that there was only one phase, or rather said 2 phases, where the index actually was consolidating for a long time. So this was the Harshad Mehta run, and just imagine the run. It went from Nifty, although Nifty was not present at that point. Nifty started in 1994-95, but this is a simulated sort of return index formation before Nifty actually started around 1995. So this is going from around 300 up to about 1200. So 4x index going 4x before it went into a sort of a ranged outcome for the next 10 years. So just imagine that we were at 10,000 Nifty, and if it goes to 40,000 in a span of less than maybe 18 months, and then of course for the next 10 years it does not go many places. So that's the kind of situation that we had in 1992 run. The run was so huge that it first collapsed back about 50%, then it went back and retested that high, and then it sort of went into a limbo for the next 3-4 years before this .com move came, which again was about almost I would say more than 100% move here. And then this was the very sort of troubling period of 2000 to 2003, where we had a 3-year sort of bear market. Coming out of that 100% gain in the index, and then of course it was the sort of preparation for the huge run up that ensued 5 years from there, from around 900 going up to about 6,400, so about 6 to 7 times the rise in index from this point to this point in less than 5 years. And then of course the GFC crash and the recovery within a year and a half. So what the point to note is that wherever we have crashed, we have recovered very quickly. So Harshad Mehta crash, within couple of years back to same index. 1998 this crash, back to same index. 2000 .com crash, back to the same index within 3 years. 2008 crash, back to the same index within 3 years. Again a small dip here, back to this, and COVID crash, back to it within 1 year. So it does not take more than 2-3 years for the index to come back. That has been the historical precedence, at least in the Indian market. So if you are coming in to the market with gradual allocation to capital and you are making use of that SIP in the downward period, you will be at par within virtually no period. Within 12 to 18 months you will be at par, and at the end of 3 years you are sitting in profit. So given that while index may consolidate for a long period, there are a lot of opportunities even in those periods. So within this segment also you can see there was a huge run up in 93-94, huge run up in 98 to 2000, huge run up in 2003 onwards going there. And even in this period where the Nifty kind of stagnated from 2008 peak only to be taken out in 2013, this entire rally from the 2008 bottom to 2010-11 was a huge run up, and huge amounts of opportunities were available here, just like you have seen very recently in the COVID rise also. So don't feel that index may consolidate and hence there will be no opportunity and will not make money. That is not the case. Another case I can show you is that, and this is the same sort of chart showing you that net, if you came in at the Harshad Mehta peak and you did a lump sum entry, it took you maybe like 10 years to start making money on that lump sum. But lump sum is never the preferred way of coming into the market. You must come in gradually, so that even if you are starting at the peak, you gradually build your capital over time, and then of course there will be opportunities to better that. Another example that I can show you is that of the US market. So this is S&P 500 index, and it's on a monthly scale. So you can see here that the kind of run-up that they had in the 25 years preceding this sort of, ranged outcome that we had from 2000 to 2013, index went from around 60 to 1300. So 20 times was the gain in S&P 500 over 25 years before it sort of stopped going up for the next 13 years. And even in that 13 years, there were huge opportunities twice to ride these bull runs. These are not small opportunities. This is like going from somewhere close to 700 going to about 1500. So doubling of market here and more than doubling the market here. So have you had a plan for exiting and for a re-entry or for reshuffling the portfolio or for following the strength in the market? You would have made money even in this box where the index net did not go anywhere. So don't get bogged down by these so-called thesis that index will go into a Japanese like situation, or the index will go into an S&P 500 like situation for next 10 years, hence no money will be made. That is not the case. Another sort of, I wouldn't say insight, but this is some sort of black magic that is continuing to happen, is that the dollar continues to strengthen. The dollar is indeed blessed by God, and the nation with the biggest debt continues to flourish very well. Their currency is going stronger and stronger, and the rest of the world, of course, is a mute spectator to this. So as this keeps going on, obviously the transactions in US dollars will gradually reduce, but it may take decades for that to play out and for an alternate currency or a basket of currencies to come in. So as long as dollar is continuing to strengthen, emerging markets will not be able to perform, gold will not be able to perform, non-USD based assets will not perform. This is this is not rocket science. It has happened many times in the past also, and you can see here that while USD was strengthening from 2008 bottom till about 2000, you can say 14-15, we had one election rally during that. Otherwise that period was full of lull for us. The great emerging markets rally happened when dollar is collapsing. So you had a good run recently in 2017-18, then of course a good run post the COVID crisis also here in 2000. Starting from 2003 to 2008, we had a fantastic, the best run of Indian market happened while the dollar was collapsing here. So this is the sort of correlation that we have with the USD, and I hope God is listening and we will have some favorable tailwinds for our market soon. So now this is the Nifty index, last 20 odd years on the chart. One thing you must appreciate is that Nifty does not make new highs quickly. I mean, even after a huge run up here till 2008, it fell down, but it came back to it within a matter of couple of years. Again, run up here, fell down, came back. Again, fell down, COVID came back. So it's falling here. It will come back up. I mean, that is the sort of precedence that we have, because we are a growth market. If not one company, the other will grow, right? I mean, there is competition in Nifty stocks. Nifty will itself remove all the laggard companies like it has been doing all these years. If you were sitting with the Nifty companies which formed in 2000, you will be sitting on maybe like a dud portfolio, because Nifty itself is a churning, self sort of propagating portfolio. It's almost like a momentum portfolio. That staying in Nifty itself is rewarding, and if you are able to better Nifty, nothing like it. So don't lose heart because market has done this, because it has done this many times in the past and it will keep doing that, but you have to see through that pain so that you can make money on the other side. This is another sort of chartical potential of an inverse head and shoulder. I tweeted about this I think today. So 8.5 years is what, this is IndusInd Bank, by the way. I have nothing against the bank. I hope all shareholders make a lot of money in it. No personal position in it as well. But just to sort of emphasize the whole idea about that you may have bought this 8.5 years back. You saw your stock going, 3x from where you bought it. Then you saw it drop almost 90% from there. Then you saw it go up 6x from there. And now you're back to where you had started from. I mean, most humans can't endure that kind of pain. Of course, if you can, you are superhuman. Hats off to you. But why do you want to put yourself in such pain? If you are coming in without a strategy, this is the kind of pain many stocks will give you. You don't want to do that to yourself. Why are you becoming your own enemy? If there are ways and means of avoiding this kind of pain, please use them. That's the whole idea of this. And of course, there is a technical formation of an inverse head and shoulders. Not inverse, direct head and shoulders that is happening here. If that plays out, this is going to 400, but I hope that doesn't happen. And the pattern can always fail, 50% of the times. So this is just sort of one potential in the passing. And this is all I had for today's episode. Thank you so much for watching this. Please do like and subscribe to this channel and do share it with your friends and family. I'm sorry about the noise in the background. My neighbor has been continuously building, but I'll see you in another video, and bye bye.